Imagine a world where trillions of dollars flow seamlessly through utility-driven crypto networks, reshaping global finance. XRP, hbar, and XLM aren't just projects. They're the keys to a future dominated by tokenization, 24/7 trading, and institutional DeFi. While major banks sit on the sidelines now, the real bull market ignites when they join. With supply shrinking and demand soaring, are you ready to witness the greatest supply shock in crypto history? Let's dive in and uncover the path to unprecedented growth. Have you ever wondered what could completely transform the crypto landscape? It's not just hype, speculation, or even the latest trend. It's something far more fundamental. Stay tuned as we uncover the secret force that could redefine everything you know about Bitcoin and beyond. You might have heard the term supply shock floating around the crypto world lately. It's a hot topic, and for good reason. Supply shocks have the potential to dramatically shift the dynamics of the market. But let me ask you this. Have you really stopped to think about why this concept is so powerful? One thing we know for sure is that Bitcoin is a scarce asset. It's a fact that has been echoed by countless experts and enthusiasts over the years. This scarcity has always been one of its defining features. But here's the twist. The real impact of this scarcity isn't just happening overnight. It's a gradual process, slowly unfolding and reshaping the market as we know it. What does this mean for the future? We'll dive into that shortly. But first, let me welcome you to MMO Crypto, your ultimate destination for insightful and actionable crypto content. If you're passionate about staying ahead in this evolving space, make sure to hit that subscribe button and turn on notifications. You'll want to stay tuned as we reveal how supply shocks could be the game changer you've been waiting for. If you're searching for clarity in the ever-changing world of crypto, you've come to the right place. Prepare to uncover the insights that could put you ahead in this dynamic space. Welcome to MMO Crypto. If you're new here, let me introduce you to the channel where crypto enthusiasts and investors come to find actionable insights and stay informed. Whether you're a seasoned trader or just starting your journey, this is your go-to source for cutting-edge information. At MMO Crypto, we believe that knowledge is the key to unlocking success in the crypto world. So, if you're ready to level up your understanding and take your strategies to the next level, be sure to hit that subscribe button. Turn on the notifications so you never miss out on our latest content designed to keep you ahead of the curve. What if the days of speculation and hype in crypto were finally over? A new era is emerging, and it's changing everything. Let's dive straight into it. The crypto market is undergoing a massive transformation. We're moving away from speculation, hype, and all the noise, and entering a phase of legitimization, institutionalization, and utilization. This shift is redefining how we see and interact with digital assets. Take this. A recent post highlighted that 2025 demand shocks will spike Bitcoin's price. The prediction came from Signum. But there's more. Other headlines like Bitcoin demand shocks looming, Ripple's stablecoin, and crypto IPO predictions for 2025 are painting an exciting picture for the future of this space. For example, Bitwise projects major crypto IPOs like Kraken and Circle going public by 2025. And that's not all. Just recently, JP Morgan increased price targets for Bitcoin mining stocks, while regulatory approval was granted for Ripple's RLUSD stablecoin by the New York regulator. These developments aren't just headlines, they're signals of the big leap crypto is about to take. Imagine a market driven not by hype, but by utility and institutional trust. That's the future we're heading toward. Are you ready to embrace it? Can you feel the shift? Crypto is no longer just an underground movement, it's capturing the world's attention like never before. It feels like we're approaching a tipping point. Everywhere you look, crypto is taking center stage. Why? Because we are right in the middle of a bull run, and the excitement is palpable. Alt season is kicking off, and it's clear that the entire market is buzzing with activity. Big players are making their moves. Discussions about Bitcoin reaching astronomical prices and supply shocks disrupting the market are everywhere. But amidst all the chatter, there's something crucial happening: the rise of institutional involvement. This is where the narrative truly shifts. Institutions are no longer sitting on the sidelines. They're stepping into the game, and their influence is reshaping the market in profound ways. The focus is no longer just on speculation, it's about building a foundation for sustained growth and adoption. What does it mean when institutions start leading the charge? It's a game changer, and the crypto landscape will never be the same. Behind every major innovation is a visionary. But what about the companies paving the way for blockchain? Let's uncover a hidden gem. One name that doesn't get enough attention in the crypto space is Panta Capital. While not widely discussed, it has been a trailblazer since 2013. Panta Capital has consistently invested in digital assets and blockchain companies, offering investors a comprehensive gateway to this transformative space. Here's why Panta stands out. It is the first U.S. institutional asset manager solely dedicated to blockchain technology. From the very beginning, their focus has been clear: to drive innovation and adoption within this ecosystem. As blockchain technology continues to integrate into traditional finance, companies like Panta are becoming crucial players. They've laid the groundwork for what could be one of the most significant transitions in financial history. If you think blockchain is just a buzzword, think again. The institutions shaping its future are already rewriting the rules. Are you paying attention? What happens when giants like BlackRock and Fidelity embrace blockchain? The financial world changes forever. The crypto revolution is no longer an underground phenomenon. Heavyweights like BlackRock, Fidelity, and other Wall Street giants are stepping into the blockchain arena, marking the start of a seismic shift. And this is just the beginning. Take Panta Capital, for instance. From its inception in 2003, it evolved rapidly to become a blockchain-focused player. In 2013, it launched the first US-based cryptocurrency fund, the Panta Bitcoin Fund, setting a precedent for institutional investments in digital assets. By 2019, Panta introduced the Venture Fund 1, the first blockchain-exclusive venture fund, further solidifying its pioneering status. The historical milestones are remarkable, from the genesis block of Bitcoin in 2009 to the explosive integration of blockchain into traditional finance today. These achievements underscore how institutions like Panta have not only kept pace with innovation but have actively driven it. As institutions rewrite the rules of finance with blockchain, one question remains: how will you position yourself in this revolution? Why are certain companies leading the charge in crypto? Let's look at what makes pioneers stand out. Why focus on Panta Capital? Because they represent the essence of what makes blockchain adoption thrive. With roots going back decades, they've been a pillar of the crypto ecosystem, navigating through its evolution and pioneering initiatives from the very start. Notably, their holdings have captured attention. Billionaire Insights revealed Panta's involvement in prominent altcoins like TON, Solana, and Ando. These strategic moves showcase their foresight in identifying and supporting impactful projects. Their journey isn't just about capital, it's about shaping the future. As Panta Capital and others pave the way, the question remains: are you prepared to follow their lead into the future of finance? How does consistent growth redefine crypto expectations? Let's explore the trends that have stood the test of time. Here's something fascinating about crypto. Over the past 11 years, it has consistently doubled in value on average. While many might find this surprising, it's actually a predictable trend for the market. This year alone, Bitcoin has more than doubled, yet this growth fits perfectly within the historical narrative. This trend underscores why so many investors remain long-term focused. It's not about chasing short-term gains, but recognizing the market's capacity for exponential growth, potentially by orders of magnitude. In addition to Bitcoin, we've seen strategic interest in tokens like TON, Solana, and Ando. These aren't just random picks. They highlight an evolving market that thrives on innovation and adaptability. As the market matures and new opportunities emerge, the real question is, are you prepared to embrace the next wave of growth? What drives the crypto market's ups and downs? It's time to decode the cycles shaping its future. Predictions for crypto continue to emphasize its upward trajectory. Value surges are expected, and it's not without reason. Over a decade of experience in the space has shown that growth happens in cycles, bull and bear phases that rely heavily on liquidity. The market rides the waves of liquidity cycles, but the real question is, what happens when utility becomes the primary driver? Imagine a space no longer reliant on speculative trends, but thriving on practical application and adoption. As we look ahead, the focus isn't just on gains, but on the mechanisms powering those gains. Utility-driven growth has the potential to redefine how the market operates, creating cycles built on real-world use cases rather than sheer speculation. As the crypto market evolves, are you prepared to navigate cycles driven by utility rather than liquidity alone?
A bit about cryptos. We've been doing this for 11 years, and Bitcoin's almost begun a little bit more than doubled this year. And so everyone's talking about, isn't that wild, it doubled? On average, it's done that for 11 years in a row, right? So crypto going up double is not remarkable, actually. And so we're normally long because we think the markets are going to go up, another huge amount, like another order of magnitude possibly. So we're typically long. We're always just looking at which other tokens are interesting. We have a big position in TON, Telegram's token, Solana, Ondo.
What if utility, not speculation, becomes the core of crypto growth? Let's explore the next big driver of the market. Utility is the key to unlocking the full potential of blockchain networks. The efficiencies these networks create for traditional markets and industries could transform the financial landscape. This is one of the reasons why Dan remains so optimistic about the future of crypto. For example, a recent CNBC report highlighted that XRP has emerged as a significant player, even being dubbed the biggest winner of the Trump trade. While opinions remain split on how far its rally can go, the underlying message is clear. Utility is starting to take center stage. Though access to some of this information is restricted, such as the paywalled CNBC article, key insights have surfaced. One notable point is how Galaxy Digital referred to XRP as a blast from the past. But is it really just that? Or is it a glimpse into what utility-driven adoption could achieve? As networks become more efficient and utility takes the lead, are you ready to see which projects will redefine the future of crypto? Can institutions and regulations coexist to shape crypto's future? The crypto space is no stranger to divided opinions, especially when it comes to XRP. Recently, Galaxy Digital appointed former JP Morgan director Tony Petta as CFO, a move that underlines the increasing institutionalization of the space. Meanwhile, Alex Thorne, head of research at Galaxy Digital, referred to XRP as no more than a blast from the past. This divide highlights the bias often present in crypto discussions. While some dismiss XRP, others see its utility-driven growth as a signal of its potential. Regardless of where opinions lie, one thing is clear. The evolving intersection of institutional involvement and regulation will be pivotal for the future of crypto. As these dynamics unfold, how will they redefine the crypto landscape? What happens when innovation meets government support? A closer look at the pro-crypto administration's role. XRP's rise as one of the biggest winners under the Trump administration underscores a larger trend, the legitimization of the crypto space. The administration's pro-utility and pro-innovation stance has shifted the focus from speculative assets to technologies with real-world applications. This emphasis on adoption and value-driven tech has positioned crypto as more than just a niche market. By fostering innovation and encouraging utility, the groundwork is being laid for 2025 to be a landmark year for the entire industry. With such strong backing for crypto innovation, are you ready to embrace the opportunities ahead? What opens the floodgates for crypto adoption? Let's discuss the power of regulatory clarity. Back in August, I made a post about the importance of regulations. One article predicted 2025 demand shocks will spike Bitcoin's price, driven by growing demand and limited supply, a classic supply shock. But here's the bigger picture. With proper regulatory clarity, the floodgates truly open. Utility projects will gain the green light to take center stage, leaving speculation behind. This shift not only redefines market dynamics, but also paves the way for crypto to secure its position in mainstream finance. As regulations turn the light green for crypto, are you prepared to seize the opportunities they unlock? A changing crypto throne, what lies ahead for the new king of blockchain? The race for the top spot in crypto is heating up, and it won't be Bitcoin or Ethereum leading the way. As trillions are tokenized and transactional use cases dominate, these legacy assets fall short. Instead, regulatory clarity is setting the stage for a massive green light in the industry. Institutions are already predicting that by the end of 2025, 100% of the world's leading financial centers will approve crypto legislation, including the US. This is where the future of finance converges with innovation, opening doors for utility projects to claim their rightful place. As institutions align with a regulated crypto framework, will you be ready to embrace the new era of blockchain dominance? How does global regulatory clarity unlock crypto's true potential? This is why 2025 is set to become a monumental year for crypto. Global regulatory clarity for the first time. By the end of 2025, it's predicted that 100% of the world's leading financial centers will have approved pro-innovation, pro-blockchain legislation. The US, already a leader in this movement, is expected to resolve its stance fully. This clarity paves the way for sustained growth in crypto prices, driven by confidence from institutions and markets worldwide. It marks the beginning of a new era where blockchain innovation thrives within a clear regulatory framework. As global regulations take shape, will you be ready to embrace the crypto opportunities they bring? How do demand shocks reshape the crypto landscape? Let's explore their impact on institutional adoption. The narrative of institutional adoption has always been ahead of actual data, but that's changing. Regulatory advancements, including the introduction of spot ETFs, are paving the way for wider adoption. At Galaxy, the belief is clear. With further regulatory clarity, the stage is set for sustained institutional involvement. Demand shocks will become a driving force. So far, only a small number of major institutions like pension funds have ventured into crypto assets. As regulations solidify, demand from these players will surge, making early adoption a key advantage. As demand grows and institutions step in, are you positioned to capitalize on this next wave of adoption? Can XRP withstand the pressures of demand and supply shocks? Yes, everything is aligning for 2025. There's going to be a lot of demand shocks, in my opinion, with regulations. We are going to see the biggest players dive into the space. And you know what's crazy? A lot of them have already been preparing with names like Ripple. When we think about demand shocks and supply shocks, is it crazy to assume that XRP could very well have a supply shock tied to it? In fact, just the other day I saw a post come up on my timeline saying that only about 39 billion XRP is left for transactional use cases, the payment use cases. A lot of people think that 39 billion is a lot. But when we're thinking about how much money is out there, how much money will be tokenized on-chain, and how much XRP the retail sector is going to be holding, the numbers suggest otherwise. With supply diminishing and demand rising, will XRP redefine its place in the crypto ecosystem? Could XRP's potential supply shock reshape the crypto market? You gotta remember what percentage of the world is even holding XRP. A supply shock is 100% possible for XRP, especially once utilization kicks in. Think about this. The biggest demand drivers for crypto still aren't buying. Wirehouses and bank wealth management platforms, names like Morgan Stanley, Merrill Lynch, UBS, Wells Fargo, JP Morgan, and Goldman Sachs, are currently sitting on the sidelines. While Morgan Stanley has limited exposure, the majority of these platforms haven't even started allocating crypto for their clients. Once these players step in, the dynamics of supply and demand will change dramatically, and XRP could be at the forefront of this transformation. As institutional players gear up, will XRP's supply shock become the defining moment for crypto? How will the absence of major banks from the crypto space change in 2025? The recent price action has been driven largely by high-net-worth individuals and a small portion, 8%, of hedge funds, as shown in the data below. Meanwhile, the most systemically important banks, which control trillions of dollars in assets, are completely absent from the market right now. When these major institutions step in next year, the real bull market begins. A breakdown of these names, like Morgan Stanley, Merrill Lynch, UBS, Wells Fargo, JP Morgan, and Goldman Sachs, reveals they've yet to fully engage in crypto. Additionally, aggregate spot ETFs data from Q3 of this year highlight just how early we are in adoption. It's surprising that people still focus on Bitcoin's supply and demand shocks when the network utilization doesn't match the hype. Much of Bitcoin's activity stems from ETF buying volume, the retail sector, and high-net-worth individuals, not its utility. Will 2025 mark the transition from speculative gains to utility-driven growth in crypto? What happens when enterprises and institutions fully embrace utility-driven crypto? When we're looking at XRP, I look at hbar, I even look at hedera, right? XRP, hbar, XLM, all these projects. Take a step back real quick. If we're talking about Bitcoin having a supply shock or a demand shock, and we're thinking about these higher prices that are going to be created from just buying demand, you now have these utility projects that enterprises, big banks, and institutions are tied to. They want to utilize them for payments, they want to utilize them for institutional DeFi. And then you mix in tokenization. So you have trillions of dollars potentially flooding on-chain that are not just going to sit there. They're going to be traded 24/7, 365, swapped, bought, and sold. Then you also have yield generation from them as well. As utility projects gain traction, will they redefine how financial systems operate globally? How will supply shocks and utility-driven growth shape crypto's future? Are we really looking at this in the same perspective as, all right, well, yeah, Bitcoin is going to have a demand or supply shock because of just buying demand. And then we look at these utility projects and people are thinking that there's way too much of them because XRP has 100 billion total supply. Since then, a lot has been burned through transactions, so it's less than 100 billion. But you get the point, right? Everyone's looking at 100 billion and they're like, that's way too much XRP or hbar with 50 billion. Oh, that's way too much hbar. It's not. When you mix in enterprises, corporations, institutions, retail, and then these use cases that are going to utilize large percentages of the supply, there's technically not enough supply. Which means, guess what? We are going to witness a supply shock. It might not happen this year, it might not happen next year. But with all of these big players basically getting the green light through regulations, that's the start. That is the beginning of the supply shock. Which means, guess what? The prices have to be significantly higher. That's why these institutional investors, that's why these institutional platforms like Panta are so bullish on this space. They have been here for well over 11 years. They see how much adoption has happened in that time. And from here on out, it's only going to snowball in a much larger way. When we think about projects like XRP and the XRPL, I get very bullish, not because of what Ripple's doing, not because of the price going up, but because of the path forward for this technology. This technology will become a much larger piece of the overall global system. I don't think people realize what's really going on here. If you found value in today's insights, subscribe to MMO Crypto and stay ahead of the curve. We're here to keep you informed and empowered as the crypto space evolves. Click that subscribe button and be part of the journey shaping the future of blockchain technology.